Ladies and gentlemen, K Kim here. Welcome to the daily update. Hope you guys had good, long holiday weekend. Market is up a little bit. Actually, it was up quite a bit. I think at one point S&P was up close to 2%, but it closed the day with the 1.23%. I think what really kept the market going today was the banks, the financials. XLF is up, I think close. Last time I checked, it was close to about 5%. Russell 2000, I believe, around 3%. So we got the banks and the small caps really led the way today, while the large tech companies saw some drawdowns, a slight drawdowns in S&P. Was up almost 2%, but gave up some of its gains. We saw a pretty significant gap up today at open. So let's dive in. Let's talk about it. Let's start with the short-term price action. This is the first hour, second hour, third, fourth, fifth, sixth hour. So you can see we saw a pretty significant gap up there. And it has been, this is pretty much what has been going on pretty much since April. We'll see a gap up. And even here, you can see we saw a gap up here. And it pretty much hung around all day. And then next day, seeing a, kind of grind lower. And then next day, gapping up. We've been actually seeing this type of action pretty much throughout last few months here. So I think today also, we're kind of staying in that trend, I guess. I think a lot of people might have thought that we may see a follow through for, first time in a really long time, because we have not seen a follow through after a big gap up. You know what I mean? Like, I think last time we saw a big follow through like that was like April 1st or something like that. We have not seen it. It has always been a gap up and then dripping lower throughout the day. That has been kind of what's been going on in the last couple of months here. So let's zoom out a little bit and let's just kind of trying to digest. So what happened actually was, if we actually zoom out, we can actually kind of see what actually happened. So first, and this is something we've been talking about on the daily update videos last week, that buyers want to go up and fill this gap, right? So finally, they did that right here. That's where the gap started. The gap is finally filled, and we came down to that level, and that's the level is that prior swing high. So that's gonna be a short-term support there. So we can now go ahead and clear this out, because there's no longer a gap here, and that's a good sign in the longer term of things, because what buyers want to do is buyers want to get up and continue to fill these down gaps that were made in early, mid-late March, right? We still got a couple more gaps here. If we zoom out a little more, you can see that there's the gap here. At one point, there were many gaps, right? There are gaps from here, 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 here. Look at how many gaps there were, and bulls were filling all of them. And that tells you that we want to continue to give benefit of the doubt to the buyers in the longer term. But we know that when the gap gets filled, it's going to act as resistance. And maybe that's why it's been harder for the bulls to see a follow through after a gap up, because it seems like every time they see a gap up, there's a gap that's in their way. And then once that gap got filled, it's going to act as instant resistance, and then it pulls back. But the good news is that bulls been opening up their own up gaps. So here, so let's see, let's put this here. So that gap still remains. So what I'm going to do, right now is I'm going to put this, that's the first short-term support at 299. And then I'm going to put a second support right here. That's the level where you can see that's the prior resistance, potentially new support. And then the third level is obviously the gap fill area. So we got three support levels here. We got current support at 299. And these are the supports to look for tomorrow, right? So we got 299, 297, 295.38. And keep in mind, 299 was that swing high, remember from the before? Here, I'll show you that again. Right there. It was this one right here. You see that wick? That's what we're seeing, a little bit of support towards the end of the day today. And then next support is this swing high, right, from May 20th. So that will be 297. And that's the level is actually coinciding with my short-term moving average. You see that squiggly line is right beneath that level, right at that level. It's no coincidence, it's no mistake that short-term moving average is guiding in that vicinity because that's the prior resistance. So if we do continue lower, that's gonna provide support. If bears really bring it down tomorrow, or if we see a gap down, that will be the best way. Gapping it down, then maybe turn this into some kind of island top reversal. And when I come down and fill this gap at 295.38, and remember when the gap gets filled, it's going to act as support. We have to be fair about that because remember this thing happened. This slide happened because this gap was filled. Remember we just covered it. So we have to be also fair for the sellers. If this thing does come down, fill this gap, it's going to provide support because also we're still in an uptrend. Let's zoom out a little more. And so if we zoom out a little more here, this market continues to cultivate higher highs and higher lows. And we've been talking about when the market does this, you want to continue to give benefit of the doubt to the buyers in the longer term. Short term of things and micro term of things, we got a little bit of selling pressure, but we've seen these kind of action before. And so I still want to continue to give benefit of the doubt to the buyers. And we've seen some instances where bears were able to bring it down for a couple of days, and that only happened in April 21st and May 13th or so. But every single time when we see a kind of a droopy, sliding lower type of action, it seems like market brought it right back up next day or next couple days at least. You can see here. So I continue to give benefit of the doubt to the buyers, obviously, and bears want to fill these gaps, probably gapping it down with the best way. Let's look at the oscillator here real quick. And looking at this oscillator from last time, one thing I noticed from this oscillator is that we did not come all the way down to the bottom of its band. I mean, it's been happening like that pretty much the entire of this move, May and April. But this is the first time where we saw that kind of a falling over waterfall type of move and not come down all the way to the oversold level. And we kind of stopped short here. So we're kind of, okay, so there's a couple things happening. One, bulls are getting a lot of momentum here. Bulls are now trying to get into the next gear, next level. So bulls are really trying to build the momentum and increase their speed, getting into that next level uptrend. So we don't know that yet until this thing gets back up all the way to the overbought level. If that happens, then at that time we can say that bulls are getting into the next gear, and we could expect some kind of a follow through at that time. Even the short term perspective, when it gets up here, that's gonna short term bearish. However, bulls gonna trying to continue like this, where it's gonna continue to come down short, and then gap back up. And while it does that, the price gets higher and higher and faster. For bears to stop that from happening, what bears need to do is, remember, let's zoom in here a little bit. Remember, we have a higher high. You see that? That's a higher high. What bears need to do is make this into a what? Bearish divergence. By bringing this thing down below 295, below 293. If we can see that, then you'll see this oscillator rolling back down, hence cultivating lower high on the oscillator, while the price action has already cultivated higher high. That's a bearish divergence. That happens, that's going to make things a little bit hectic. If bears really want to make things more hectic for the bulls, they must gap it down, open up little gap, open up island top gap, and then have this oscillator roll over at the same time. Combination of that two, it's going to make things hectic for the buyers in the short term. But overall, we still have bullish momentum, and I think the important factor will be how this oscillator is going to react in this vicinity. If this thing goes all the way up, that's bullish in the midterm. It will be short-term bearish because we're overbought, but it will be bullish in the midterm. It will be better if the bears can bring this down somewhere here, roll it over, turn into a bearish divergence. So it'll be interesting to see how the bulls and bears are going to react to this level. We got this gap area, we got some support level to watch. We got oscillator rising currently, giving the implication that the buyers are still in control, despite the fact that we saw some short-term decline towards the end of the day today. So I'll come back to you guys tomorrow. We'll follow up, we'll re-examine this situation, and we'll go from there, right? You guys have a wonderful evening, and good luck trading tomorrow.